But changing the world can happen anywhere, and anyone can do it. So what starts here can indeed change the world. But the question is, what will the world look like after you change it?
Hi, good evening, guys. So check it out. If you guys give me 10 minutes of your time in this video, I'm going to teach you guys how it is you're actually able to profit in the Forex market. So some of the stuff we're going to check out today is we're going to be checking out some information about currency pairs, what could be traded, at what times can it be traded, and which ones are the ones you want to trade as far as the currency pairs. Looking at the charts, we're going to actually break it down so where you guys are able to understand how much money you guys can make per pip. What is a pip? Stay to the end of this video to find out. And I'm going to give you guys an example of how I was able to make $400 in a night trading Forex. So first things first, guys, understanding what it is we're actually trading. So we trade currencies based against each other, compared against each other. So in the Forex market, guys, it's a $5.3 trillion a day industry where it's countries trading against countries, governments participating in that as well, and even just something as simple as trade that happens between countries. If you look around your room, you're going to have stuff that is not from your home country. And just off of that idea right there, you understand that your country had to give somebody else their money to bring that product back for you to enjoy. So looking at this right here, getting back on track, what we actually look at is, so we compare currencies. So the euro compared to the USD is the example I have on the screen for the moment. So how you would end up reading this is one of the base is equal to whatever the exchange rate is for the quote. So 1 euro is equal to 1.2345 USD. So some of the pairs that you guys can actually trade is, like I said, every country against every country can be a possible currency arrangement that you trade, but these are grouped into how much liquidity they actually have in that $5.3 trillion a day. So these are the major pairs right here on the screen. And as you can see, most of these have the US dollar involved in them. The reason why they have the US dollar involved in them is because the US themselves have a very huge share of the market as far as what we do with other countries. So looking at some of the minor pairs, these are them right here. And these are basically just other countries, some are smaller countries compared against other countries. Some of them are still big countries. Main difference is they do not have the USD pair involved with them. So looking at some of these, right, you can see that these top 5 right here are minor pairs, and the last 2 at the very bottom, guys, those are considered exotic pairs. These are ones that have very small liquidities in the total $5.3 trillion a day. So just to keep it simple, guys, just understand that the bigger the liquidity is for that currency, the more opportunity there is to take trades and the ability there is to make money every single day. So what I mean by that is, looking at this next slide, we can see the USD, Euro, the Yen, and the GBP. These are the top 4 countries out of all the main ones listed right here on the screen. So trading these currency pairs, this is going to be something that's going to be able to give you guys opportunities, because when there's more liquidity in the market, the exchange rate is going to always be fluctuating. When the exchange rate is always fluctuating, people like us, Forex traders, we're in business because we can make money off of the exchange rate either rising or the exchange rate falling. So now that I taught you guys a little bit about what countries can trade Forex, I'm going to show you guys where and how they're broken down into their different sections. So you have the US, which is a New York session, Euro, which is a London session, and you have Asia, which is also called the Sydney, Tokyo session. So looking at this right here in the top right corner, I have these broken down into their actual time zones based off of Eastern time. So Asian sessions is going to be Australia, it's going to be your yen pairs, and all of those countries on that side of the world. And so what this means, guys, during their sessions is basically that is their business day. During their business day, there's going to be more volatility in the market because there's going to be more actions happening with that country's currency. So looking at this, London session is going to be Europe, GBP, and stuff like that. New York is the dollar, the United States dollar, as well as the Canadian dollar. And the rest of the currency pairs are just split into those three. You guys could do homework on your end to figure out what currency pairs are best traded in what sessions. But for the most part, guys, what I need you guys to understand is that Forex is something you could trade 24 hours a day from 5 p.m. Eastern time on Sunday all the way to 5 p.m. Eastern time on Friday. During the weekend, the markets are completely closed. Easiest way to remember that is that your banks are closed over the weekend. So looking at this, one thing I need to mention before I actually hop over to a chart is I want to show you guys candlesticks. So a candlestick is what they use to represent the growth that happened to the exchange rate during a certain amount of time, or to show the negative growth. So positive growth, you could just say green. I have my charts color coded that way to teach you guys. And for red, it's the same method to where it's just negative growth for the exchange rate. So we can see that price, opened, closed, and these things right here, these tails, those are called wicks. So going back one slide, you guys can see that the more green candles we see price continues to rise. So the exchange rate is right here on the left side of the screen and the right side of the screen. So if price is going to go up, then I'm going to enter a buy position because I am saying that price is going to go up. If I think that price is going to go down, if I think that the currency exchange rate is going to devalue, then I will enter a sell position based off of where I think that is going to fall from. So in this example right here, just to break down a little bit of what's on the screen itself, we have the Euro USD in the top corner. That's showing you guys the pair I'm looking at. Now, right here, the 60, what this is saying is that each candlestick is worth 60 minutes of time, or also known as 1 hour. So you can look right here, we have a 1 minute, 3, 5, and it continues to go in increments, minutes, hours, days, weeks, months. So checking this out, guys, whatever time frame you guys pick is totally up to you. But just understand that when you look at the 1 hour to 4 hour and the daily, you're going to be able to see the overall picture. And if you guys zoom in to like the 1 minute, 3 minute, 5 minute, you guys are going to see specifically what is happening at that moment in time. So you guys can have a little bit of a different view based off of what charts you pick. But at the end of the day, Forex is something to where you need to come in here and figure out the best strategy for you to be able to see these opportunities in the market, whether it's going to go up or down. And if you watch the next video, we're going to teach you guys how to get to that. But to finish up, we were talking about here, right? I'm going to be talking about a buy versus a sell position. So at price, right, 1.1356, we can see right here, the fourth decimal place is a pip. So with this right here, if I'm in a buy, I need to see this 6 turn to a 7, to an 8, to a 9, to 1,360, and continue to go up per pip. That is how I make money. So if I'm in a buy, I need to see price go up from the price I entered at. We're just going to say I entered a position at 1.13560. So like I said, I need to see this go up. Now, if I'm in a sell, guys, I need to see price go down. So the moment this 6 turns to a 5, to a 4, to a 3, I am making money per pip. Now, how it is that we're actually making money off of that in itself is by right here. So looking over here, we have our lot sizes, we have per pips, and the amount of money you can make or lose per pip. So lot sizes, guys, 0.01 is the smallest you can use. For this example, we're just going to go to 10. The highest I've seen is 100. And I'm just going to keep it simple in increments of 10. Just understand you guys can pick any number in between all of these right here. You could pick 0.02, you could pick 1.3, and just keeping it going with that idea. You have your lot size, and you take that, you multiply that times 10, and that is the amount of money you can make or lose per pip. So in this example, I'm going to highlight this drop that happened for the Euro USD. And in 5 hours, we can see right here at the very bottom, this blue text box, price had dropped almost 90 pips. So checking this out, guys, in 5 hours, if you guys were already trading, a 0.01 for 90 pips would be $9. If you had a trade that was a 0.1, you would have made 90. If you had a 1 for your lot size, you would have made 900. A 10 would be 9,000. So you can see, guys, lot sizes is what determines the amount of money you guys make, but your lot size is determined by your experience and your account size. Coming into this, we're going to teach you guys the best ways to use risk management to financially keep yourself afloat and not use too big of a lot size, or what we call as over leveraging your account. At the end of the day, we want to keep as much money in our account. We do not want any opportunity to lose money, because just as easily as you can be making $10 a pip, you can be losing $10 a pip. If I'm in a buy and price goes down, I'm losing money. If I'm in a sell and price goes down, I'm losing money. That is how this works, guys. So as traders, we get better figuring out what happens in the 50-50 game, figuring out if it's going to be going up or if it's going to be going down. Last thing I want to show you guys to end this slide is how I was able to make $400 in a night trading Forex. So with this right here, one thing we could check out is I had a 0.1 for my lot size. I made $40. I made $40, so we could do the math and we could figure out a 0.1 is $1 per pip. So we could say almost I caught 40 pips on GBP USD. We could say that I caught 85 pips. This second trade right here for GBP USD, we say I caught 100 pips. And so look, guys, right here is what's important. I want to show you guys the value in Forex. By me just simply changing this 1 to a 2, I doubled the amount of money I made. And if we look, I almost caught the same amount of pips. These numbers are almost totally the same. 12991, boom. See, we're off by 6 pips right here and the difference that I caught. But anyways, keeping it going, a 0.2 for your lot size is equal to $2 per pip. So we can see right here, I caught a little more than 100 pips. Now on this last example with the USD JPY, I was in a sell, and this is what happens when you're wrong trading. I took a trade, right? It was negative $28. So what that means is with the 0.3 lot size, I more or less was negative 10 pips. So with that right there, guys, this is how trading Forex works. Watch the next video to figure out how it is that I was actually able to make $400 in one day from my laptop trading Forex. Thank you guys for your time. This is Ruben Clark.